Welcome back, my friends. Ford on Monday announced significant price cuts for all versions of its electric F-150 Lightning pickup. The cheapest version of the Lightning will now start at about $50,000, a roughly $10,000 cut. All versions of the EV will get price cuts of at least $6,000 as Ford works to boost production this fall. Tesla is suddenly cutting vehicle prices. Price cuts are taking effect in the US and Europe. Tesla is trying to rejuvenate sales after lackluster year-end deliveries. The move in the US may help Tesla qualify for more federal EV tax credits. Tesla did everything they could to stoke sales volume in the United States and abroad. The electric vehicle maker is facing stiffer competition and interest rates increased. If you follow stocks, you probably know that shares of Tesla fell consistently throughout 2022. Meanwhile, Tesla has been taking aggressive actions to improve sales and operations, offering discounts and incentives to improve sales. What does it mean for the economy? And what does it mean about the future of the United States? But before we get into all of that, please press the like button and leave a comment below. I would love to hear from you. Please subscribe and hit the bell icon so that you are notified of upcoming videos when they are released. And before we continue, a word from the sponsor of this video. Today's sponsor is InnerLife.com, creator of the InnerLife STS system. InnerLife STS is a cloud mobile platform for mental health care and its integration with primary medical care. InnerLife STS is designed for assessment, data collection and analytics, documentation, and progress tracking. InnerLife STS creates and composes conceptualized narratives and builds them into professional-grade reports. These reports are designed for use by mental health professionals, primary care physicians, justice system professionals and universities and include mental health assessment reports, mental health treatment reports, and treatment progress reports. And InnerLife STS uses doctor-selected pseudonames for all patients. So, only the healthcare professional knows the patient identity. Ford cut prices on its electric F-150 Lightning pickups by as much as $10,000. Ford Motor on Monday cut prices for its electric F-150 Lightning pickup, saying its efforts to boost production and lower costs for battery minerals have paid off. Ford said prices for some of the least expensive versions of the Lightning would fall by nearly $10,000. Prices for all versions, including the top-line Platinum trim, will drop by at least $6,000 from levels set in March. The company had increased the Lightning's prices several times since its 2021 debut, citing supply constraints and sharply higher prices for the minerals used in the electric truck's batteries. Ford has worked to increase production of the truck in recent months, with factory upgrades that are expected to triple its output set to be in place by fall. The Dearborn, Michigan factory that makes the Lightning will be closed for several weeks while the production upgrades are put in place, Ford said Monday. Increasing production of the Lightning and other Ford EVs has been a key priority for CEO Jim Farley this year. But the effort to boost production hasn't been a smooth one. Ford sold just 4,466 Lightnings in the second quarter after a fire in a just-completed truck in February led it to shut down production for 5 weeks. At the time of its 2021 debut, the lowest-priced version of the Lightning, the Work Truck Pro trim, was about $40,000. That price was increased several times, hitting about $60,000 in March. Monday's cuts reduce the entry-level truck's sticker price to about $50,000. The most expensive version of the Lightning, the extended-range Platinum trim, will now start at about $92,000, down from just over $98,000. Ford is scheduled to report its second quarter earnings after the U.S. markets close on July 27. The company said its efforts to boost production and lower the costs of battery minerals have paid off, according to a Wall Street analyst's report. Who knows whether this will lead to a cost-cutting spiral? But one thing we do know after today is the bloom may be off the electric vehicle rose, as we always knew would have to happen eventually when there's mass adoption. EVs are losing their excitement factor, which many realizing they miss old-fashioned gas-powered cars, and others realizing they can buy EVs from a whole manner of manufacturers like General Motors, Rivian and Tesla. Ford said the good news for investors with money in Ford is that despite these cuts, the vehicle's prices are still higher than they were when Ford first announced the new models in 2021, with the cheapest truck at $40,000, and production costs are lower. The bad news, however, is that it remains to be seen whether the company can meet its estimates, which Wall Street had dubbed aggressive, according to Ford. Ford's stock dipped on Monday, down nearly 6% after market close. It doesn't help, Ford said that these cuts come just a few days after Tesla unveiled its first Cybertruck, the optics of which he called suboptimal. Ultimately, unless your costs come down, and that's what's happening with Ford, there will be no profit anyway, Ford said. But if an auto company doesn't make electric vehicles, that auto company will eventually be doomed, we all know that. Last week's government inflation data showed used car prices were falling and likely stabilizing to levels just above pre-pandemic pricing. It seems prices for used electric vehicles, however, are falling even faster. According to auto research firm iZcars.com, used EV prices are collapsing more than those in the overall used car market. In the firm's June 2023 report, the data shows that used EV prices have fallen by nearly 30% year over year, with price drops actually accelerating from 8.8% in January to 16.8% in March and to 29.5% in June. The firm analyzed transactions from over 1.8 million 1- to 5-year-old used cars from the June 2022 and 2023 time period to capture the results. A year ago, used EV prices were on the upswing, rising faster than the average used car, said iZcars executive analyst Carl Brower in the report. Electric vehicle prices are now falling at nearly 10 times the rate of the average used vehicle, reflecting a clear shift in EV supply and demand. Meanwhile, the overall used car market is stabilizing according to iZcars.com, with overall prices down 3.6% year over year in June, following price drops of 2.9% in May and 3.6% in April. Tesla's massive price cuts earlier this year put extreme downward pressure on the used EV market, which is dominated by Tesla EVs like the Model 3 and Model Y. With Tesla cutting prices on new models, its used EV values have tumbled. And because Tesla makes up the bulk of the used EV market, the dramatic drop in Tesla values has impacted the entire category, Brower said. Other factors pushing prices lower on the second-hand EV market include fuel prices stabilizing this year, hurting demand for EVs, rising interest rates, and price-conscious shoppers looking for better vehicle deals regardless of powertrain, Brower said. Looking deeper into the data, the top 10 models with the steepest price drops included 6 hybrid and electric vehicles, with Tesla occupying 3 of the top 5 slots with the Model 3, 30.5% drop, Model X, 21.3% drop, and Model S, 19.0% drop. Conversely, used cars with the biggest overall price increases were traditional gas-powered cars led by the Mercedes-Benz SL convertibles, Fiat 500X crossover, Chevrolet Suburban, and 2 Porsche sports cars, the 911 convertible and 718 Cayman Coupe. Looking across metropolitan markets in the U.S., the data showed that the Miami market saw the steepest used car price drops at 8.1% year over year in June, followed by New York, 6.9%, and Jacksonville, Florida, at 6.8%. Only Dallas, Salt Lake City, and San Antonio saw used car price appreciation across the 50 metro areas covered by iZcars. The bottom line for used EV car buyers could be this: if you want a cheap Tesla EV, now might be your best chance to buy one. And don't shy away from going across state borders to Florida or New York to buy one. It seems as though Tesla is finally getting competitive with their vehicle pricing. Price cuts are taking place in the United States and throughout Europe. Wall Street analysts suspect that price cuts may help Tesla qualify for more federal EV tax credits. In Europe, Tesla cut prices on its Model 3 and Model Y vehicles. Tesla cut prices on the Model 3 and the Model Y from 1% to around 17%. Tesla's Model 3 was the best-selling electric vehicle in Germany in last month. The Tesla Model Y was second. Those two models outsold Volkswagen and its popular electric vehicle, the ID.4 in Germany. With the new discount, Tesla's Model 3 is priced comparable to Volkswagen's ID.3. The price of a new Tesla Model 3 in the US has dropped between 6% and 14%, depending on configuration. Tesla cut the price of the Model Y by 19%, also depending on configuration. The Model 3 is Tesla's entry-level sedan. The Model Y is a sport utility vehicle or crossover. Tesla also cut the price of its Model S sedan. The Falcon-winged SUV Model X has also seen its price lowered. Generally, electric vehicles qualify for tax credits in the United States, depending on a few factors. The U.S. government is expected to set new rules about sourcing of raw materials and battery components. A $7,500 clean vehicle tax credit until at least the end of March 2023 is at stake in the United States. As things stand right now, Tesla, and other EV makers, can buy parts and critical minerals from anywhere. And they will still qualify for some EV subsidies. Under the current, interim rules, electric vehicles need to complete final vehicle assembly of their electric cars in North America. The latest round of discounts by Tesla are designed to capture EV tax credits in the longer term. In late December, Tesla discounted its Model 3 and Model Y cars by about $7,500. Tesla also gave some U.S. customers 10,000 miles worth of free supercharging. Tesla reported deliveries of 405,278 vehicles and production of 439,701 vehicles in Q4. Wall Street analysts expected 50% in annual vehicle delivery growth over several years. Tesla missed that goal and Wall Street analysts' expectations in the fourth quarter. Wall Street analysts expect much higher in 2023 than in previous years. But some bearish analysts are concerned over a possible demand cliff. Tesla is now facing headwinds. More competition, higher interest rates, and slower consumer spending than in recent years. Bernstein analysts wrote, "We believe that many investors underestimate the magnitude of the demand challenges Tesla is facing." Bernstein has an underperform rating and price target of $150 on shares of Tesla after the company's share price declined in recent months. But, what do you think? Please leave a comment below and press the like button. Please subscribe and hit the bell icon so that you are notified of upcoming videos when they are released. Please share this video on social media. Thank you for watching.